Google just reported earnings a few hours ago. It was an excellent quarter, and the market is reacting to the usual stuff: ad revenue, cloud growth, Gemini updates, standard stuff. But the analysts missed the most important number. It wasn't mentioned on the call, it isn't explicitly listed in the slide deck, but it's sitting right there, hiding in the non-marketable securities line item. There's a $111 billion asset inside Google that the market is currently valuing at zero. A secret shadow asset that is worth more than the entire market cap of Starbucks or Nike. And the crazy part, this asset has nothing to do with search, and it has nothing to do with Gemini. Google is secretly one of the largest shareholders of the most valuable private company in history. And thanks to a merger that happened yesterday, that asset is about to explode. Today, I'm going to show you why buying Google stock right now isn't just a bet on AI. It's a backdoor key to the space economy. So what exactly is this $111 billion secret asset? Well, the answer resides in a headline that broke yesterday. SpaceX just acquired xAI. Quick context. SpaceX is the muscle. They're the rocket company founded by Elon Musk, catching 200-foot rockets out of the sky with giant robot chopsticks. xAI is the brain. They own Twitter, now called X, and they built Grok, a competitor to ChatGPT, Claude, and Gemini, and the only AI that drinks a fire hose of 24/7 real-time data from Twitter. And yesterday, the muscle bought the brain. Now let's pause. You're probably wondering, why does a rocket company need a chatbot? And what on earth does that have to do with your Google portfolio? Well, the answer is the most profitable secret in tech. In 2015, Google quietly bought a massive slice of SpaceX. They didn't brag about it, they just held it. And today, that forgotten investment is your secret backdoor key into a $1.25 trillion monopoly that's about to make Google Cloud look like a lemonade stand. In this video, I'll break down why this space monopoly is suddenly worth more than Google's entire cloud business. Quick disclaimer, I'm not a financial advisor. This is just my personal analysis of a stock I own. Always do your own research before investing. All right, let's do this. A lot of people think that SpaceX just makes rockets. What's the big deal? Well, the reason this merger is worth over $1 trillion is because of a crisis happening right here on Earth. We're hitting a physical wall. To cool a modern AI server farm, you need water, a lot of it. Tech giants are currently draining local reservoirs to keep their AIs from overheating. The grid is full. Local governments from Virginia to Germany are banning new data centers. SpaceX isn't just making rockets and launching satellites. They're launching flying data centers. Look, I know, it sounds crazy, but hear me out. In space, you don't need water cooling. You dump heat into the void of space, which is negative 270 degrees Celsius, for free. You don't need the power grid. You use the sun, which shines 24/7 in orbit, for free. This merger lowers the cost of intelligence by removing the utility bill. In 2 years, the most competitive AI won't be the one with the best code, but the one with the lowest energy cost. By shipping data centers into space and leveraging proximity to the sun, SpaceX could make earthbound AI companies, including Google, look like legacy AI burdened by physical gravity. That is the first moat, but it's not the strongest one. If you own Amazon stock, you're probably aware of their SpaceX competitor, Project Kuiper, now known as Amazon Leo. So, can't they just launch their own AI satellites? No, they can't. And the reason is the railroad. Imagine if, during the gold rush, one company owned the only railroad into California. Everyone else had to hike over the mountains. Well, last month, Amazon had to formally ask the FCC for an extension on their satellite deployment. Why? Because they literally ran out of rockets. Jeff Bezos' Blue Origin is years behind schedule. So what did Amazon do? They had to kneel. They quietly signed a deal to buy launches from SpaceX. Think about that. Amazon is paying their biggest competitor to launch their own product. SpaceX is effectively charging their competitors a tax to enter the market. This creates a margin gap that can never be closed. SpaceX is playing the game on easy mode while everyone else is paying premium shipping. Now, let's get a little contrarian. This is the regulatory arbitrage. On Earth, AI is getting strangled by red tape. The EU AI Act, California safety bills, GDPR. Governments are terrified of AI and they're slowing it down. But space law? Space law is the Wild West. By moving the brain of the AI to orbit, XAI is effectively creating a sovereign cloud. Data processed in international waters or international vacuum is much harder to censor, tax, or shut down. It's the Swiss bank account of information. For global enterprises who are afraid of local government overreach, the SpaceX cloud becomes the only safe haven. This commands a premium price, a freedom premium that terrestrial clouds like Azure or Google Cloud simply can't offer. Okay, back to that number in the title, $111 billion. Let's do the actual math so you can see where I'm getting this, because it depends on two critical numbers. First, the stake. While Google has never publicly confirmed the exact decimal point, most institutional analysis pegs their ownership from that 2015 deal at roughly 7.5% after dilution. Second, the IPO. The current merger values SpaceX at $1.25 trillion, but the leaked target for the public listing in June is $1.5 trillion. So if you take 7.5% of a $1.5 trillion market cap, you get roughly $111 billion. To put that in perspective, that's nearly double the market cap of Ford. And right now, Wall Street is valuing that asset at zero because it's locked up. But the moment that IPO bell rings in June, that zero turns into $112 billion of liquid cash on Google's books. That's the margin of safety. Right now, you can buy Google for its PE ratio based on search and YouTube, but you're getting the SpaceX stake for free. It's like buying an old jacket at a thrift store and finding a winning lottery ticket in the pocket. Even if you think Google search is dying, the SpaceX stake is the perfect hedge. They're effectively one of the largest shareholders of the company that is disrupting them. Now, we need to talk about the asset everyone loves to hate, X, formerly Twitter. Why is X part of this deal? Is it just Elon's ego? No. It's the training data. In 2026, AI models have a problem, the dead internet. Most of the web is now filled with AI-generated slop. It's trash data. If you train an AI on trash, you get trash. But X is different. X is the only platform on Earth where 500 million humans are typing real-time thoughts, news, and reactions every second. By owning X, the new SpaceX entity owns the global nervous system. ChatGPT learns from the past, archives. Grok learns from the present, X. This gives the SpaceX AI a latency moat. It knows what's happening in the world before it hits the news sites. For financial traders, governments, and military users, that 5-minute advantage is worth billions. And here's the true contrarian bit. With X payments rolling out later this year, X becomes the wallet for the space economy. You won't just use X to tweet, you'll use it to buy Starlink bandwidth or rent time on the orbital supercomputer. It completes the loop. And finally, there's one last layer. Owning the stock is one thing, but having access to the computer is another. There's a second company involved here, one that just controversially wired $2 billion to XAI last quarter. Everyone called it a bailout, but if you look at the orbital compute model, that money wasn't a bailout. It was a reservation fee. This company just secured exclusive priority access to the world's only space-based supercomputer. That company is Tesla. Tesla is increasingly a robotics company. Optimus, their humanoid bot, needs to think. But if Tesla puts millions of robots in our homes, the inference cost, the cost to run those brains, would bankrupt them, unless they own the compute. By investing $2 billion now, Tesla is prepaying for the space brain. They're locking in a cost structure that competitors like Boston Dynamics can't match. The Tesla trade is a bet that SpaceX intelligence will flow into Tesla bodies. And as a bonus for the bears who think this is all a bubble, what if the rockets explode? What if the IPO fails? You have to look at the third silent partner, the US government. SpaceX recently launched Starshield, a secure satellite network for the military. The Pentagon now relies on SpaceX for communication, navigation, and surveillance. They cannot let this company fail. This provides an implied government backstop to the stock. It's the too big to fail argument, but for national security. When you buy into the SpaceX ecosystem via Google or Tesla, you're buying into the primary defense contractor of the 21st century. So here's the reality. The SpaceX IPO in June is going to be a circus. The allocation will be impossible to get. The price will likely pop 50% on day one, leaving retail investors holding the bag. You can chase the hype, or you could play the arbitrage. The market thinks Google is a search engine. The market thinks Tesla is a car company. The market has not realized that these are the two largest shareholders of the space economy. The smart money isn't waiting for the IPO, they're buying the parents. So now that you know the shadow trade, does it change your portfolio? Let me know in the comments. And as always, this isn't financial advice, it's just physics. Catch you in orbit.